Guys, check this out. Bitcoin is just continuing this rally to the upside in what has been an incredible last 2 months. The total crypto market cap has reached $775 billion. We just keep pushing closer and closer to that $1 trillion mark. And did Bitcoin prove itself to be a reliable store of value in 2020? I think the answer is yes, but we'll dive into this article and investigate that a bit further. This analyst claims that Bitcoin is poised to plunge down to 20K as this rally starts to slow down. I think he could be right, and we'll dive into some technical analysis to get some specific targets on a pullback entry. Also, the FUD surrounding the SEC's ruling about self-hosted wallets continues as the representatives in Congress pen a letter to Steve Mnuchin to extend the comment period for the traditional 60 days. Also, we'll take a look at DeFi and Ethereum today. DeFi is up over $14 billion. We'll talk about how that is very, very bullish for the Ethereum price. And also, it appears that, well, whales are starting to accumulate more and more Ethereum. All right, guys, I have a super exciting episode for you today as we close out 2020. So make sure you sit tight, grab yourself something to drink, and hang out till the end of the episode so you can see what trade setups I am in as we head into 2021.
JP Morgan just came out with an estimate of $650,000 per Bitcoin. Citibank is estimating $300,000 per Bitcoin. So I think they kind of see what's happening here. They want to get ahead of it. They want some exposure to it, but nothing's going to stop this now. The central banks, they thought they had the game completely rigged with their collusion, the global banks all working together to keep and not only to keep fiat money viable beyond its term, but to attack gold. As we know, JP Morgan, how many fines have they paid for gold manipulation? Innumerable fines. And we see that in all the big banks.
Bitcoin is Facebook for money. If Facebook's worth $1 trillion because it stores the social energy of 1 billion people, Bitcoin has got to be worth 100x that much because it's storing the money of 1 billion people.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel. My name is Johnny. Let's get into today's episode. But before we do, if you guys could go ahead and smash that like button, and don't forget to hit the subscribe and ding that bell to stay up to date on all the latest and the greatest. I just want to wish all of you a very, very happy 2021. I know this year's been quite tough for a lot of us, but if you are involved with crypto and specifically Bitcoin, you are probably having a bit of a better year than a lot of people. So we'll start with some great news. So the total value of the cryptocurrency market cap as a whole has surpassed $750 billion. Bitcoin still dominates the total crypto market cap with about 71% of it in Bitcoin. Experts believe 2021 is going to be one hell of a year for Bitcoin and the cryptocurrency market as a whole. Now, the total value of the market has surpassed its all-time high, largely driven by the rising Bitcoin price and the institutional FOMO that we've seen enter the market beginning in about November. Now, on December 31st, today, the total value of all cryptocurrencies combined has reached $775 billion. That's a pretty significant milestone, and we're only going up from here. So There is a lot of that, though, that is locked in Bitcoin. And with all of the institutional money that is coming into Bitcoin, it's only a matter of time before retail finally gets involved with Bitcoin again and we start seeing even more massive skyrockets in price. Now, on January 1st of this year, Bitcoin was approximately $7,100. Then we saw the dip down to just under 4K. And, you know, since then, Bitcoin has risen about 300% from January of this year to where it is right now, right at about $29,000. Now, some experts are predicting Bitcoin is going to hit some incredible highs in 2021. And Tom Lee is definitely one of them. He's a researcher at Fundstrat, and he's predicted that it's going to be a lot like 2017. And it should do much better in 2021 that we've already done in 2020. And you know what, Mr. Lee, I completely agree with you. Elsewhere, you know, Willy Woo, the man, if you follow him on Twitter, you know, he's always posting some really interesting takes on the market from an analyst perspective. And he suggests that the capital inflow into Bitcoin this year was unprecedented, and we've just seen the beginning. It says it resembles 2017 levels, after which Bitcoin's price surged by 1,400% by the year end. Willy Woo expects a similar bull run in the near future for Bitcoin. And, you know, with this limited supply, its uncorrelation to traditional markets and really the value proposition that it brings to investors is really unlike anything the world has ever seen before, and there's nothing but room for Bitcoin to continue to grow and work its way into the lives of everybody on the planet. Now, with all of this said, did Bitcoin prove itself in 2020 as a store of value? What do you guys think? Do you think it did? Do you think it did not? I'd really like to know. Go ahead and leave a comment down below, and I will definitely pick the best ones to talk about in the next video. So without any doubt, 2020 was unlike any year we've all seen before, with this pandemic, unstoppable money printing, the financial catastrophe that is going on in the background. You know, the pandemic and everything that's going on across the world has dominated news cycles, and no one has really been talking about, as far as mainstream media goes, about what is happening with the financial market. Now, we are moving into what some are calling the New Testament of finance. You know, really, there's going to be a ton of changes through 2021. We're going to look back on this time, and we're going to really see a very, very different way of life than what we will be living in the near future. Now, you know, there's still a lot of FUD out there about Bitcoin, whether or not it's a reliable store of value. People are still using the same arguments that were beat down their throat by the same people that are now saying they are investing heavily into Bitcoin. They're still pulling those arguments out of the bag like, you know, like it's something to really discuss. Bitcoin's volatility has decreased significantly since its peak in mid-March, and that was really due to the dump in traditional markets that we saw. At the same time, investors were dumping their Bitcoin as well because they knew that the dollar was going to get a strong bounce and that they would be able to buy in at a much lower price. Now, some of you may have seen one of my first couple of videos where I did discuss the Great Reset. Now, the World Economic Forum is doing a whole marketing campaign. This is pretty serious. They are marketing this whole Great Reset as a turn to decentralized technology like Bitcoin on a massive scale. And honestly, it is really one of the only solutions right now that exists to prevent the world from falling into financial chaos. Another 2020 milestone, obviously, the rise of institutional investors. If this hasn't proved it for you enough that Bitcoin is an incredible store of value, I really don't know what will. I mean, people, smart money, billionaires, the ones that, you know, really move these markets are hedging their exposure to traditional markets with Bitcoin. And it really can't go unnoticed with all of these high profile investors. It's insane. And then, you know, unsurprisingly, the crypto space has started to consider the rise of Bitcoin mining institutions inevitable. China's dominance over the world's Bitcoin mining operations seems to be challenged right now by the US, but most importantly, the future of crypto mining will become more sustainable. One of the biggest things is a very, very energy intensive process to mine a Bitcoin Bitcoin or Ethereum. And, you know, with the rise of renewable energy technology, this is going to get a much more profitable endeavor for people, especially as the prices continue to soar. Now, the new Bitcoin era, after everything that happened last year, is really forming the new financial order. If fiat money might lose up to 90% over the next 100 years, it already has. We've already lost 97% of the dollar's value just from 1913. A little over 100 years, it's lost almost 100% of its value. Bitcoin's future seems to be much brighter than it is right now. And if you think back to 2017, mid 2017, after we crashed from 20K, people really just forgot about Bitcoin and completely wiped it off their radar. And now people are looking back, but we do have to get them over the stigma that Bitcoin is some scam by that douchey Facebook friend that you knew from high school, that became a millionaire from investing in Bitcoin, but really had no idea what the hell he or she was doing. We really have to remove that scammy, that stigma to Bitcoin. And I think with all this institutional money and a 6-figure Bitcoin, I think that will be all that we need to get retail really excited about what is coming. So did Bitcoin mature enough to become a reliable store of value? Well, Brian Brooks, who is the acting comptroller of the currency, he said, quote, "We hope that our July 2020 regarding crypto custody will make Bitcoin safer for institutional and retail holders, hodlers, hoodlers. Bitcoin was the innovation that opened the door to decentralizing financial services, and the growth of it and other tokens in 2020 shows that the beginning of a transformation of cryptocurrencies from an exotic concept to a more familiar and comfortable means of engaging in financial services is becoming a reality." You got Dahong Fai, founder of Neo, and one crypto that we really haven't heard much about in 2020. He's also the founder and CEO of Onchain. And he says about Bitcoin that he has witnessed and survived various ups and downs. And if you've been in this market, you are right there with him. I know I am. And it now appears that investors on the whole are increasingly more confident in its value. More significantly, I believe that this signals how quickly we are moving towards mainstream adoption. And he couldn't be more correct there. And then this article goes on to discuss all of these high profile institutional investors and people in leadership positions really expressing, their interest and their confidence in Bitcoin as a store of value. We do have to mention Jimmy Song. He's one of the coolest guys out there right now. He says, "It's not that Bitcoin has matured, it's that we have." The mainstream investors are starting to take notice of Bitcoin's 12-year history and starting to recognize how valuable it really is in a world of near infinite quantitative easing. Bitcoin gives us true scarcity, and that's why it's useful as a store of value. Literally nothing, I'm going to say that again, nothing like this has existed in human history. Bitcoin is the most incredible opportunity, and to be alive right now, to be able to participate in this at this point, we're going to look back at this when we're old and gray. If you have kids or grandkids, you're going to tell them, "I was alive when Bitcoin made it." Like, this is huge. We are on the precipice of something incredible. But before we head to the moon, I think we are due for a small pullback. Found this article. One thing that's cool, if you guys don't use it, it's called Crypto Panic. You can go on to Crypto Panic, create an account, and it just gives you this huge dump of news. It's a pretty awesome news aggregator. I use it just about every day, and it does point me in the right direction most of the time for different types of news that I'm looking for. All right, moving on. So Bitcoin saw a massive rally or actually since Christmas, since it broke out in early October or mid-October, but we saw a nice rally just recently. It did meet some serious selling pressure once we reached near 30K, just above 29, sending the price back down temporarily. But this guy notes that each leg is getting smaller and smaller, and each consolidation period is getting smaller and smaller. This is a very clear signal that buyers are starting to get exhausted. However, this may not be the case. This is usually the case in terms of retail investors, but the amount of money that is consistently coming into this market is really, something to take into consideration when we try to kind of guesstimate how high that this rally will go before we finally do get a pullback. Now, he said, his rationale here is that time and distance of each Bitcoin move gets smaller, less consolidation and less upwards movement. Markets can be like a pendulum, and this will swing the other way. Theory remains unchanged. We will see low 20Ks. I completely agree with you, man. Cole Peterson, my TA, is really showing the same thing. And this may happen around the same time as we get some more FUD news. So representatives in Congress are asking Munchkin to extend the commitment or comment period for the proposed self-hosted wallet rule for, the traditional 60 days. So FinCEN, the Financial Crimes Enforcement Network, issued a notice of proposed rulemaking that would require more stringent Know Your Customer KYC and reporting measures for exchanges, cracking down on anonymous transacting and self-hosted wallet activity. In its notice, it provided for a 15-day comment period as opposed to the traditional 60 days for significant proposed rules. Now, Representatives Tom Emmer, Dave Schweikart, Warren Davidson, Ted Budd, Bill Foster, Darren Soto, Susan Delbane, and Tulsi Gabbard have signed a letter to Munchkin with FinCEN Director Kenneth Blanco CC'd, asking the office to extend the period to 60 days, which is typically the standard. I don't understand here. If the rule is implemented, the letter also asks FinCEN to consider a 6-month extension of implementation to allow stakeholders to find solutions to the upcoming rule. This is highly complex rulemaking, as the 24 detailed questions that FinCEN asks in the notice attest, said the letter, it would be impossible for the public to give meaningful comment with so little time, and a rushed process threatens the legitimacy of this rule, and it makes the new regulations very susceptible to legal challenges. I mean, obviously, this is just completely reckless on their part, and it really feels just like a jab right in the shins on the way out. Either way, once they're gone, I really don't see this being a major issue in terms of cryptocurrency, because the self-hosted wallet rule is really something that's damn near impossible to enforce. All right, let's look at the Bitcoin price. We are looking at the daily chart here, and again, we've just been breaking out since we got this bust out of this triangle in early October. Bitcoin has just been on a tear with a small consolidation right here that began right around Thanksgiving, and then we took off on the 15th, and then we got another small consolidation here, which was that diamond top that I was pretty bearish on, but we broke that bullish on Christmas Day and just continued heading to the upside. Now, as Cole mentioned, these consolidations and legs are getting shorter and shorter, meaning that we are running into some buyer exhaustion. So if we zoom in a bit on the 4-hour chart, you can see, so this is the 200 EMA on the 4-hour, and we broke out of this ascending triangle or double bottom that was really our only significant correction so far in this rally. We moved up into this diamond top structure that actually ended up breaking bullish, and it did so with some strength. So upon breaking this diamond top structure, Bitcoin has just been on a pretty consistent tear, and we are really looking and waiting for an opportunity for a pullback. So that's one thing that I am doing right now. So I did enter into a trade yesterday, looking for a move possibly up over 30K, but we didn't actually move past 30K, but I did pull out in some profit. Let me see if I can actually pull up that chart. Let's see, here we are. This is the chart that I shared with my group yesterday. I had a buy order sitting down here right around 28,196. We did come down and fill, and I did get out of that trade with some pretty significant profit, up about 84%. Let me see. There's the, where'd it go? There's the screenshot there of the profit and loss. So that was a nice little order. And, we are looking at Ethereum too. But, my overall game plan here, and it hasn't changed. I'm really just because I did unfortunately take profits in this diamond top, thinking that we were going to come down and consolidate, but we didn't. Again, we got the nice Santa Claus rally and continued this movement to the upside. But Bitcoin really is kind of I mean, depending on how you look at it, you could say it is slowing down, but at the same time, it does appear to be continuing this rally. Now, it is putting in another rising wedge, which, traditionally, or most of the time, it is a bearish pattern, letting us know that we should be headed for a correction very soon, but it just keeps pushing and pushing to the upside. If it does break this upper trend line, we could be in line for quite a bit more upside. Now let's look and see what kind of targets we really want to plan for here with Bitcoin. So let's go on the macro scale here first. We are on the daily. If we do take a fib trend-based extension tool, start from the low that we saw back in early March or mid-March, and we will go to the high that we saw in mid-August, and then we'll come back down to the low right before we entered this parabolic move. Again, you see I'm looking for a one-to-one extension here that does fall in line with some Elliott wave theory, and we should be due for a three-wave correction after this. But the one-to-one takes us right to $31,964. That is my primary target here, and that is where I will be looking not to enter into a short position, but to be monitoring my buy orders that I do have well down here. Now, we should be getting some bounces on the way down, but again, if we zoom out and look at the weekly chart, this does not appear to be slowing down whatsoever. However, since we broke this $20,000 resistance, more like 19.5 up here, actually, yeah, 19.5 after we broke the new all-time high, considering how strong of a resistance level this was, I am fully expecting at least a retrace to come down and give us that bullish confirmation that this area will now be further support. So what we're looking at here is this 21 weekly EMA that currently is sitting just above $16,680. And of course, as the price remains above $29,000 or $28,000, we will get this EMA to move closer and closer and closer. But, considering we have had quite a few green candles in a row, we did get this consolidation here again, right around the beginning of December. And it just looks to be like, it just looks as if it is just going to continue. So going back to the daily, let's actually go ahead and mark this 21 EMA. It's right at 16,507. That will be one of our buy order placements just above. And that happens to be pretty close to the 200 daily EMA. So that's a little bit of confluence there, right around the 0.5 or 0.382 retracement level of this fib extension. If we actually zoom into the 2-hour, we can get a bit of a better idea of what near-term price action is doing. Again, I am not entering into a trade here. I really want to see some sort of consolidation pattern develop before I enter into a trade, just because we are so close to a potential top here before we get a nice correction. So I'm really just keeping my eyes peeled, and the plan here is to layer in buy orders. Now, these will change. They could change depending on how price action develops. And if you want to stay up to date on all of these buy orders and all of my charts, go ahead and join the free Telegram group. The link is in the description below. But what I'm planning on doing is layering in these buy orders here right around this $19,500, $20,000 level resistance. And I really have just been having these sit down here for quite some time now. So really looking at, potential levels of re-entry here. We're really just waiting to see if Bitcoin breaks this bullish structure. And if it does, we will then be looking at a correction, and we will be damn sure that our buy orders are in place and ready to go. Also too, here we broke this diamond top to the upside, and we have not gotten a retest bullish confirmation of this upper trend line. I mean, we kind of have, but nothing significant, if you will. Even on the 4-hour chart, we just broke out of there like a bat out of hell and didn't look back. So, this could be an area of retracement in the near term, letting us know that this might be a re-entry possibility. It's really going to depend on what things like the MACD and RSI look like. Speaking of, let's go ahead and take a peek at those right now. So, we are looking like we are due for some corrective movement here. If we look at the volume weighted and the regular MACD, it does appear that we have a bit of bearish divergence. I think this is the volume weighted. Yeah, this is the volume weighted MACD. And we do have a little bit of bearish divergence here on the histogram, but the stochastic looks pretty good, but it is in the overbought territory right at about 100, a little over, so we are due for some downside movement soon. But again, you have to take into consideration the amount of money coming into the market. So if we look at the weekly MACD and stochastic, again, this does appear that we are in store for some downside movement in the very near future. So really the plan right now is to look at price action, keep a very close eye on it, and really look for that re-entry possibility. And one thing kind of contradicting our downside idea here is there is hidden bullish divergence again on the volume weighted MACD. So one thing you guys should do, especially in a bull market, you want to be using volume weighted indicators that will let you know a little bit more accurately where the direction of momentum is, especially considering we are in price discovery mode. Bitcoin has not ever hit these levels before, so it's really difficult to know when things are going to hold up. So in price discovery mode, really for any asset, this is not financial advice, but I do recommend using volume weighted indicators and Fibonacci tools. Those will help you out the best. Again, here's the 4-hour chart. We did break above here. There is a nice level of support, which does coincide with the 21 EMA on the 4-hour. And again, we're looking to see if Bitcoin's price does hold support here. If we do break out of this structure to the upside, if price action finds itself on the other side of this top trend line, I will be looking for a potential scalp trade up to the $32,000 area, where I will quickly either move my stop loss or just take profit right there. If we look at the VWAP, we are sitting right on top of it. Rule of thumb I typically use is if price is above the VWAP, I will not enter into a long trade. If price is below the VWAP, that is typically where I look to enter following a short or exaggerated move to the downside. If we look at the volume weighted moving average, again, it does appear to be holding support right there, which is a very bullish sign, letting me know that this continuation could last at least a few more days, possibly even into tonight. But when this correction does come, I have a feeling that, it's going to come pretty quickly, or it could come over an extended amount of time. So one thing we will be looking for to let us know that this correction is coming, if we get the break to the downside out of this rising wedge structure, price action should come down. We should get a bounce off of a moving average depending on what time frame you are in, and then we should get a bearish confirmation retest of this lower trend line, and that would be the point at which you would enter into a short if you were looking to trade the downside of this price action. But I have a very strict rule. I do not short Bitcoin in a bull market. I just don't do it. It's you might say I'm missing out on an opportunity to make more Bitcoin, but I just don't feel comfortable doing it. It just feels bad. It feels like I'm doing something wrong. But when we do break this rising wedge structure, we will be looking for the retest bearish confirmation of this lower trend line. All right, let's move into Ethereum. Ethereum very, very quickly here. Again, we did talk about DeFi. Over $14 billion locked. That is extremely bullish for Ethereum, especially on the price. If you look at Ethereum and if you consider it more of an index of the entire DeFi space, that will really let you know how to judge the price action. So a few videos ago, I did drop a video about Ethereum and how institutional investors are, increasingly becoming more and more Ethereum. invested, and some of them are even, Ethereum only investors, which is pretty interesting. So Ethereum has posted fresh post 2017 highs, but we still have not broken that all-time high, and I fully expect Ethereum to break new all-time highs as we head into 2021. And right now it's trading just over 3% of $730, marks a notable decline from its recent highs of $755 that were set yesterday evening. Now I am noticing some a logarithmic price action in the Ethereum price. If you look at the chart, you can definitely tell that it's being moved intentionally by said institutional investors. But, if you can get a good entry price for Ethereum, because there will be some volatility along the way up, you're going to want to hold that position and just hold. The best thing to do, honestly, with Ethereum, zero leverage, just buy and hold and wait. But to be honest with all of you guys, I have a very small bag of altcoins. There is some Ethereum in there. There is some DOT in there, a tiny bit of Litecoin, and everything else. I'm probably 90% into Bitcoin right now, just because nothing can really keep up with it at this point. So let's go ahead and look at my trade setups that I did share with the group on Ethereum. So this was the consolidation pattern that we are in. It does appear to be some sort of a rising or ascending triangle. Depending on how you move that trend line, you could call it a rising wedge. Now I am looking for an aggressive entry here. This is the 1 hour chart, and this entry is just above or right at the 55 EMA on the 1 hour. And I will put a stop loss just below this low right here, or actually I may move it down below this 200 EMA on the hourly. I'm not really sure just yet. I haven't entered into this trade. I'm really waiting for some more price action to develop, because this could actually be a broken ascending triangle, meaning we might be moving to the downside. But this is typically bullish price action, and this does, let me know that we should be heading to the upside fairly soon. So what I'm looking for here, if we do get a break above this top trend line here, we should at least head up here to the 783 area, which at that point we might get a retest confirmation of this upper trend line, and then head up above $820, where I expect Ethereum to hold support for the next few days. Now this is a bit more of a zoomed out chart. This has, if we can come up and cross this $800 resistance area and hold it as support, giving us the nice bullish confirmation there, from there we should move another 20%, just under $1,000. Now I really see this happening probably late January, mid-February of next year, but we are heading in that direction and the market does look pretty strong. All right, guys, that's it. That's all I got for you today. I hope you all have a very, very, very happy new year. I hope you're not part of any super spreader events. Please be careful. Shit is real out there. But until next time, I will see you guys tomorrow.